Good morning, everybody, and welcome to Live Trading Room's daily Forex analysis. Today is Friday, the 5th of January, and it's 20 minutes past 11 in the morning. Let's see how the Forex market is behaving at this point through the index grid of our best and worst dashboard. The New Zealand dollar is continuing its advance, gaining 1.89% on its currency basket, followed by the US dollar, which is recuperating after having showed weakness in the past few trading sessions, and it's up 1.22%. The British pound is at by 0.61%. Canadian and Australian dollar are barely above parity. The euro is losing 0.08%. The Swiss franc is down by 1.66%, and the yen is continuing to show weakness, losing 2.23%. Now let's go to the charts to analyze the majors. Let's start with Aussie US dollar, which is moving in a bearish tendency, correcting down after 10 consecutive record sessions. The market is moving inside the bearish zone of the target geometry, just below target number 1, after having retraced from the daily low marked below target number 3 at 0.7835. Should the market remain below the entry level at 0.7854, we could have a bearish continuation of the move. The euro dollar is moving in a bearish tendency, trying to correct upward from the daily low marked at 120.41. The market is moving inside the bearish zone of the target geometry, and we have a 50% long euro against an 85% long US dollar. So should the market remain below the entry level at 120.54, we could have a bearish continuation. The cable is moving in a bearish tendency after the false breakout of the previous daily high. After correcting upward from the daily low marked at 135.22, the market is now below the entry level of the target geometry at 1.3538. We have a bearish price action at a scalping level, and we have a breaking of the previous lows on M1, M5, and M15. The pair is losing 0.09%. We have a statistical confluence on the bearish side and an RSI below 50 up to the H1 time frame. With a 71% long British pound against an 85% long US dollar, we may have a bearish continuation of the move if the market remains below 1.3538. Kiwi US dollar is moving sideways inside the no trade zone of the target geometry. This is because we have an 85% long New Zealand dollar against an 85% long US dollar. So unless the non-farm payrolls change the market outlook, we can predict a limited extension of the daily range. US dollar Canada is moving in a bullish tendency, just below the monthly opening at 125.18. The market is moving inside the bullish zone of the target geometry, just below target number 2 at 1.2511, which was already broken. We have a bullish price action at a scalping and intraday level, and the pair is gaining 0.19% so far. We have an RSI above 50 up to the H1 time frame, and with an 85% long US dollar against a 57% short Canadian dollar, we may have a bullish continuation of the current move. US dollar Swiss franc is moving in a bullish tendency, just below the previous daily high. We're already above target number 5 of the target geometry at 0.9769. We have a percentage confluence up to the yearly level, a statistical bullish confluence, and an RSI above 50 from M5 to H4. With an 85% long US dollar against an 85% short Swiss franc, we may have a bullish continuation. Let's conclude the analysis with US dollar yen, which gave a bullish signal at the breakout of the previous daily high. The market is moving above target number 9 of the target geometry at 113.233. The market is moving above all the moving averages of the EMA dashboard. We have a confluent price action, a percentage confluence up to the yearly level, an RSI above 50 on every time frame. With a yen which is 100% short against a US dollar which is 85% long, we may have a bullish continuation. That's all for today's analysis. Thanks for your attention. Good day and good trading from Live Trading Room Trading Community.